Vedanta Limited's promoters have launched a voluntary open offer to purchase a 10% stake in Vedanta Limited. We at ET Now told you about this news first on the 29th of December, and now it's official. Remember, this is coming close on the heels of two important events. Firstly, of course, when they purchased a 5% stake via a creeping acquisition about 2 weeks ago, or 3 weeks ago in fact. And secondly is the bigger event, and that is that failed attempt to delist Vedanta Limited. In October, they were unable to garner the required number of bids to be able to really take Vedanta Limited private. So just 2-3 weeks ago, they shelled out roughly about 3,000 crore rupees. They purchased about a 5% stake at a 160 rupee price point, and now this voluntary open offer as well to purchase roughly 35 crore equity shares is coming in at a price point of 160 rupees. This announcement came over the weekend, and when you compare it to Friday's closing market price, it's at a 12% discount. Now let's understand essentially the financials bit, because because of that delisting attempt, Vedanta's promoters had roughly garnered a debt of $3 billion. So they have the financial ammunition. Out of the $3 billion, they spent roughly about 3,000 odd crore rupees. So that's roughly about $500 million in buying a 5% stake. And now they'll be spending around close to 6,000 crore rupees to purchase this 10% stake. That's assuming that, of course, the entire open offer does go through. So they will have spent more than $1.1 billion to increase their stake. Earlier in December, the promoter stake was a little over 50%, and now with this 5%, and if this 10% stake sale does go through, stake purchase does go through, then their stake will increase to 65%. Now let's also understand what SEBI says about this whole thing. In June of 2020, SEBI relaxed its takeover code. They enhanced the limit of the creeping acquisition that a promoter can make in one fiscal year from 5% to 10%. Also, there was a proviso to the regulation around voluntary open offers that says that if you have purchased a stake that did not trigger an open offer in the last 52 weeks, then you're not allowed to do an open offer. However, that limit as well was enhanced to 10%. Since Vedanta had purchased 5% in the creeping acquisition, they are very well within SEBI's regulations to be able to make this voluntary open offer. So there are two things that Vedanta seems to be taking advantage of, or rather, let's make that three. Firstly, the fact that they had the financial ammunition that they had garnered because they earlier wanted to take the whole company private. Secondly, the fact that SEBI has tweaked these codes, relaxed these guidelines so that it's easier for the promoter really in terms of increasing their stake. And finally, we are in the midst of this massive run-up in commodity prices. Goldman Sachs as well has said that commodities may very well be in a structural bull run. Vedanta Limited is a very, very prominent name, a commodity name. So Mr. Agarwal clearly wants to ride this bull run, and this he's trying to do so by slowly and steadily increasing his stake in the public listed company Vedanta.